Hello, glad to have you here. This is from the CBN, bringing you weekly reports and expert analysis of the actions, policies, and economic initiatives of the Central Bank of Nigeria. I am Misi Dada. At the July MPC meeting press briefing, Governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, had said that the continued support by both the monetary and fiscal authorities was expected to yield favorable outcomes and hopefully return the economy to a strong recovery path in the next few quarters. As the September MPC meeting holds next week, we review this statement against the backdrop of the strong GDP growth rate of 5% recorded in the second quarter of the year, as released by the National Bureau of Statistics earlier in August. But first, let's serve you the latest news from the Central Bank of Nigeria this week. The Central Bank of Nigeria says it has noticed the inherent problems associated with the processing of bulk transfers by banks and payment service providers (PSPs). Currently, originating banks and PSPs pass a single debit entry through the initiating customer's account and multiple credits to beneficiaries without adequate records of the credit entries in their system. This distorts the audit trail and hampers transparency. In order to address this challenge, the CBN has directed that all end-to-end bulk payments or transfers be processed on the platforms of banks or PSPs for their customers with a detailed breakdown of the accounts that receive the credits retained in the custody of the sender's banks. The Director, Payments System Management Department, Mr. Musa Jimo, in a letter to banks and payment service providers on Monday said the CBN required full compliance with this disaggregation of bulk payment as with other payment system regulations. The Central Bank of Nigeria has announced the change of date for its next Monetary Policy Committee meeting. It is now to hold on Thursday 16th and Friday 17th of September at the bank's headquarters in Abuja. According to its calendar, the two-day meeting was originally scheduled to hold on Monday 20th and Tuesday 21st of September 2021. At the last meeting in July, the committee decided by a unanimous vote to retain the monetary policy rate at 11.5% while also leaving all other policy parameters constant. The MPC believed that a hold stance would enable the continued permeation of the CBN policy measures in supporting the recorded growth recovery and macroeconomic stability.
Oh, I see. Just hold on. In that case, let me call out my PIN. It is 41...
Uncle, please stop.
Stop what?
You're giving someone else your personal identification number PIN?
Not someone else. It's from my bank.
Please hang up, Uncle. That's a fraudster.
That's not true. But they call out my full name. I am sure this is from my bank.
Uncle, no bank is ever going to call you to ask for your personal identification number PIN, your mobile banking password, or your card verification code, CVC.
But it sounded so genuine.
Yes, hackers and fraudsters always sound genuine. But please, Uncle, don't fall for their bait. Don't respond to any phony emails, text message, SMS, and don't click on any link you're not sure of.
Even if they call your date of birth or your BVN, don't give them your security details.
If you suspect any issue with your account, please go to your bank.
Oh, I see.
This message is from the Central Bank of Nigeria.
Welcome back. You're still watching from the CBN, bringing you weekly reports and expert analysis of the actions, policies, and economic initiatives of the Central Bank of Nigeria. Dr. Muda Yusuf is an economist and the immediate past Director General of the Lagos Chamber of Commerce and Industry, LCCI. He shares his insights on Nigeria's economic growth in relation to the support of monetary and fiscal authorities. Stay tuned. Dr. Muda Yusuf, thank you for coming on the program.
Thank you very much.
And I believe congratulations are in order. I wasn't opportune to attend your sent forth for your retirement. Congratulations on that.
Thank you. Thank you.
All right. So when I made a call to set up this interview with you, your ringtone was that of the legendary Afro musician, a Juju musician rather, Commander Ebenezer Obey, talking about his dream for Nigeria, talking about things will be better, which is optimistic. And for you to be using that ringtone, it shows that you are also optimistic about Nigeria. What accounts for that optimism? Because a lot of people are thinking things are not working as they should. So what accounts for your level of optimism?
Well, first of all, it is important to be positive in whatever situation we find ourselves. And secondly, this economy has a lot of promise. Some of them are beginning to manifest. Many are yet to manifest. But the opportunities are immense. And my feeling is that we can say that the worst is over. You know, we had a terrible contraction or recession last year. We had all sorts of issues around the economy and all of that. But from the numbers we are beginning to see, I think we are beginning to turn the corner. Of course, we still have quite a long way to go. But when we compare where we are with where we were same time last year, for instance, I think we can say that some progress is being made. But there's still a lot more ground to cover.
Okay. Talking about comparing where we were last year, this time, and where we are now this year, at the last Monetary Policy Committee meeting, Governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, mentioned that the contributions of the Fiscal and Monetary Authority will continue to yield positive results. And when the latest statistics concerning the GDP was released by the National Bureau of Statistics, we realized that in the second quarter, the economy, the GDP grew by 5.01%. Can we say that the contributions mentioned by the Governor of the Central Bank to the different sectors of the economy is what translated into the positive growth that was witnessed? What's your take on that?
Well, basically, what the figures are telling us is that the economy is beginning to recover. It also demonstrates the fact that economic activities are picking up. Things are getting normalized, generally. The tempo of economic and business activities have improved. When you compare where we are now with where we were this time last year. So two things. First, there is the fact that as a result of some of these policies, and as a result of the relaxation of some of the restrictions that came with the COVID containment measures, the economy has recorded a lot of improvement in terms of activities. So the resumption of economic activities and the normalization of business activities have contributed to the numbers, the GDP numbers that we saw. The second point, and this is also very important, is what you call the base effect. When you compare a fairly good performance to a terribly bad performance, it shows a significant growth. Because the figures we have is year on year. We are comparing quarter 2 in 2020 to quarter 2 in 2021. Quarter 2 in 2020 was a period of recession. We had perhaps the worst contraction because the GDP contraction at that time was over 6%. So when you compare that with the improvement that we have seen, no matter how marginal, it will give you a very big jump in terms of GDP. It's like moving from the bottom of the valley to the surface. The surface may not be the best, but you have progressed from the bottom of the valley to the surface. So that is what we call the base effect. So it's a combination, first, of the base effect. Secondly, of course, of all the efforts of government, the CBN, and the fiscal authorities trying to stimulate the economy. Because in fairness, quite a number of measures have been put in place over the last 1 year, especially from the monetary side, a bit also on the fiscal side. We have seen a bit on taxation side for SMEs. Some regulatory authorities have also intervened in a way to moderate some of the fees and the burden on SMEs. So quite a lot have happened. So it's a combination of both what the government has done, both on the monetary and fiscal side, and also the reality of the base effect.
A breakdown of the GDP growth for the second quarter of 2021 shows that the non-oil sector contributed significantly, talking about agriculture, transportation, telecommunication, and the rest of it. Can we say, is it safe to then say that the economy is becoming diversified?
Yes, we can say that the economy is becoming diversified. And even when you look at the structure of the GDP itself, oil sector accounts for maybe around 10% or even less. The non-oil sector accounts for close to 90% of the GDP. So by virtue of the contribution to GDP, you can see that the economy is properly well diversified, because agri contributes about 23%. The service sector altogether contributes close to 50%. So there's a lot that is happening in the non-oil sector. And when we also look at the contribution to the growth, a major driver of the growth was also in the non-oil sector, because we saw the road transportation, for instance, the transportation sector grew by over 70%. The entertainment, the motion pictures, music also grew significantly. The same thing with telecoms. You know, we also had over 3% growth in manufacturing. Agri also grew marginally. So in terms of the drivers of growth, I think the major drivers were also the non-oil sector of the economy. But the challenge with the non-oil sector is the challenge of productivity. Because productivity reflects in your revenue, it reflects in the foreign exchange earnings. If you still look at the structure of revenue, oil sector still accounts for close to 60% of revenue. And it accounts for close to 90% of our foreign exchange earnings. So there is still an issue in terms of productivity. So we are still heavily dependent on oil for revenue and for foreign exchange earnings. So that speaks to the need for us to see what we can do from the policy point of view, from the regulatory point of view, to see what we can do to scale up productivity across sectors. Because it is through productivity that you can enhance competitiveness. It is through competitiveness that you can make the sectors even more globally competitive. Because economic management or economic production or adding value to the economy is not only about what you consume locally, it's also about what we're able to put in the outside world. We are talking about putting your products in the regional market, exporting products to the continental market, exporting products to the global market. Because the export component of an economy is a very, very significant component. And you can only have that component if you have very competitive non-oil sector. But right now, we don't have that, because oil still accounts for close to 90% of our foreign exchange earnings. And even within the space of the oil and gas sector, the bulk of the export is still crude. So the element of processing and all the value addition and multiplier effects that should come with the processing, we are still missing out on that. You're talking about the refineries, for instance. We are talking about the petrochemicals. We are talking about fertilizer and all of that. These are a whole lot of things that value that we can capture within this economy. First, from the point of view of export. Secondly, from the point of view of preservation of our foreign exchange. Because the fact that we spend so much importing petroleum products is putting a lot of pressure on our reserves. We spend a lot importing even raw materials for industries, many of which are petrochemical based. It's putting a lot of pressure on our reserves. So when we have issues in the international balance of payment problem, balance of trade problem. This is where the problems are coming from. Because we don't have the level of value addition that is critical to localizing a lot of our demand, that can reduce our imports, that can make us more self-reliant. So there's a whole lot that needs to happen in terms of scaling up the productivity and competitiveness of the non-oil sector, and also ensuring that even within the oil sector itself, we do a lot of processing, a lot of less of importation, processing, and diversification around petrochemicals, around oil refining, fertilizer, and the rest of it.
You mentioned earlier that productivity needs to be improved in the non-oil sector for the economy to actually have more earnings from those sectors. How can productivity be improved in those sectors that are actually boosting the gross domestic product?
Well, the critical thing, or the most important in terms of productivity, is infrastructure. Because if you look at the whole gamut of the non-oil sector, one of the biggest problems that most of the investors have has to do with infrastructure. Because without infrastructure, you cannot industrialize in a sustainable way, in a competitive way. And when I say competitive, I'm talking about global competitiveness. Because manufacturing and industrialization is about being able to compete globally, to compete at the continental level. That is when you can actually have the kind of value that you need in industry. The same thing in agriculture. You need infrastructure. And when we talk about infrastructure, we are talking about roads, we are talking about the rail system, we are talking about broadband, even ICT that we talk about. Even though the ICT sector is doing well, but it can do much better. There is still a lot of room for improvement in developing the broadband, for instance. And if you have a very sound broadband infrastructure, it has a way of supporting the rest of the economy. The service sector is growing very fast, and it can do much better with the support of IT. And for IT to support the system, you need very sound broadband. And that can affect a whole lot of sectors. You know, whether you are talking of education, you are talking of health, you are talking of entertainment, name it, even financial services. All of them are leveraging IT. And the more you have very solid IT infrastructure, the more some of those sectors will even perform much better. So infrastructure is very, very important in scaling up productivity in many of those sectors. The cost of energy, for instance, is very high. The cost of transportation is very high. The cost of logistics is very high. So all of these things contribute to productivity challenges that the non-oil sector is facing. Then we also need a sound macroeconomic environment. Right now, the macroeconomic environment is very, very volatile. There's a lot of, unpredictability. There's a lot of uncertainty. It's difficult to plan long term because of the volatilities in many of the macroeconomic indicators. So if you have a more stable macroeconomic environment, that will enable a lot more investment. Because a sound, stable macroeconomic environment inspires a lot more confidence in investors. Look at our foreign exchange situation. Look at the volatility that we have been experiencing. Look at prices, the inflation situation. Look at what we are experiencing with inflation. So some of these key macroeconomic indicators also need to be further normalized, stabilized, in order to support the growth of the non-oil sector.
Now, when you were talking about global competitiveness as a way of boosting the contribution of the non-oil sector, I was thinking about the issue of comparative advantage. What is there any relationship between being globally competitive in certain areas and areas of comparative advantage for a country like Nigeria?
Yeah, generally for oil economies, you do better if you focus on the areas of your strength, which is what competitive and comparative advantage is.
So what would we consider the area of strength in the Nigerian economy?
Oil and gas. We are blessed with crude oil, for goodness sake. We have
but
one
many,
of the
many
biggest
advanced economies are trying to move away from the use of fossil fuel. Is that going to...
That could be an issue.
Okay.
But there is more to oil and gas than fossil fuel.
Than fossil, yeah.
You have gas. You have petrochemicals. You have all of that. And in any case, before we even transit to completely depending on renewables, it will take some time. We are talking of 20, 30, even 40 years, especially for many developing economies. So
a lot can happen.
A lot can happen.
Period.
There's still a huge market in that area. So we are blessed in the oil and gas area, and not just looking at the crude oil and all of that. In the area of processing and all of that, there's a lot that can happen. We are also blessed in agro-allied and agric. We are blessed with arable land. If we're able to invest and invest properly and do the right things, we will be a major player globally in the agro-allied sector. Right now, the few things that we export are primarily agricultural products. Cocoa, sesame seeds, cashew nuts, and all of that. And look at the massive land that we are blessed with, which many countries around the world don't have. Look at the kind of weather and climate that we are blessed with. We don't have the kind of natural disasters that we have all over the place. So that is it. Then we have a fantastic demographic structure. Our population is a useful population. The population is an asset, but we have to invest in the population, in those youths, to actually convert them into assets. So these are some of the things, and we have, of course, solid minerals here and there all over the country. How much of them are we tapping? So there is a lot that we can do from the area of ensuring that we leverage on our competitive advantage. But it takes a combination of the right policies, of the right investments, of the right institutions, of the right regulatory framework for all of these things to be, for us to unlock all the huge potentials that we have in all of these areas.
Now, to wrap it up, let's have your projection for the economic growth for Nigeria. The CBN projected 3.15% for the year. How do you see things moving? You know, the half year is gone. We are moving towards and we are in the third quarter of the year. Yeah. So let's have your projections.
Well, the projections for me are positive. I mean, if you look at the metrics that we use for the computation of GDP, the key drivers, first, the oil price is doing very well. That will have a positive impact. Second, we are not likely to experience the kind of lockdown that we had last year in terms of restrictions, because we now have vaccination and all of that. So quite a lot of sectors are coming alive. So that will also help. Then, of course, the governments are also trying to put quite a number of policies in place, both fiscal and monetary, to support the economy. But we have to also make a distinction between growth and development. Of course, what we are talking about is economic growth. Yeah. But you can only translate the growth to development if we begin to talk about what you call inclusive growth. A growth that impacts on the people. Because there is no point posting very good growth and yet there's a lot more poverty.
So how can that be achieved?
No, it's by ensuring that we look at all the variables that impact on the welfare of the people. Such as, I mean, the cost of living, for instance. We talk about the impact of inflation on the welfare of the people. The impact of inflation on real income, on purchasing power. It's a macroeconomic management issue. We need to deal with that. Because if you tell somebody whose purchasing power has been so badly weakened and battered that the economy is doing well, of course, you'll be wondering what you are talking about.
It doesn't make sense.
It will not make sense to the person. Or if you talk to an investor who is struggling with how to cost of production, foreign exchange, problem of the pause, problem of regulators, is losing money and all of that, and you say the economy is improving, it will not make sense to that kind of person. So we need to relate to some practical issues, like the welfare of the people, the cost of living, the cost of medication, the cost of education, the enabling environment for business, investment climate issues, macroeconomic stability. All of those factors are also important. So that we are not, otherwise people could just be seeing these growth figures as just purely academic numbers. If it doesn't translate into something concrete, either in their personal lives or in their business lives, whatever it is. So we have to create that linkage, and that is what an inclusive growth, that is what it's all about.
All right, we'll leave it there for now. Dr. Muda Yusuf, it's always a delight talking to you.
Thank you.
Even in retirement.
Thank you, thank you, thank you.
And that's the package from the CBN this week. If you have any banking issues or complaints that your bank could not resolve, after exploring all possible means and within the stipulated time frame, you can report the matter with relevant documents to the CBN Consumer Protection Department through the email address cpd@cbn.gov.ng. That is cpd@cbn.gov.ng. You can also call the CBN Contact Center using the phone line 070 022 55226. 070 022 55226. Local call rates may apply. Keep sending your comments and contributions to the email address from the CBN@gmail.com and follow us on YouTube, Facebook, and Instagram for updates and uploaded episodes of the program. Join us again next time. I am William Missy Dada. Stay safe and bye for now.